After 35 years in the markets, we've witnessed fortunes built over decades vanish in mere months. We've seen supposedly diversified portfolios crumble, and investors who believed they were secure lose everything. Through these experiences, we learned a critical lesson. Wealth isn't solely about growth, it's fundamentally about survival. That's why at Shamam Enterprises, we no longer simply own a portfolio. We own a global fortress. Today, we're going to reveal exactly how this strategy works and how you can construct your own resilient investment framework. Let's begin by examining the common pitfalls in how most people approach investing. They typically build portfolios, collections of stocks designed to generate returns, often chasing growth and following fleeting market trends. And when market conditions are favorable, these strategies can appear incredibly successful. However, reality often intervenes with unexpected force. Whether it's a financial crisis, a currency collapse, or a geopolitical shock, these events can expose vulnerabilities. Suddenly, that diversified portfolio proves to be not so diversified after all. Here's the fundamental distinction. A portfolio is merely a collection of assets. A fortress, conversely, is an intricate architecture specifically engineered to withstand any storm. Consider the design of medieval fortresses for a moment. Each element served a specific defensive purpose. When one section was under attack, others provided crucial support. This is precisely the philosophy behind how we structure our investments at Shamam Enterprises. Allow us to present the blueprint for our global fortress strategy. Our first pillar, the foundation, emphasizes the critical home field advantage.
Every robust fortress requires a solid bedrock, an area you deeply understand and can confidently navigate.
For Shamam Enterprises, that bedrock is the Pakistan Stock Exchange. Now, we anticipate your immediate thought. Isn't that risky? Isn't that lacking diversification? What many overlook is the immense power of local knowledge. It provides an undeniable unfair advantage. We possess an intimate understanding of these companies, their regulatory environment, and the local business culture. We comprehend the economic cycles and, crucially, how to interpret the nuances beyond the headlines. Our focus is on blue-chip, dividend-paying companies. They may not be exciting or sexy, but they have proven their resilience through multiple crises. These companies provide a steady, predictable cash flow, a vital component of our fortress. When global markets experience panic and currencies fluctuate wildly, we have a foundation we can monitor and understand at a deep level. The dividends continue to flow irrespective of market sentiment. In a crisis, that stability is invaluable. The key principle here is simple. Never underestimate your home field advantage. Your boring local market might just be your greatest asset. Moving to Pillar 2, the growth engine, focusing on developed markets. While the foundation ensures safety, a fortress also requires resources to expand and maintain itself. That's where the United States market plays its crucial role. The U.S. boasts the most dynamic capital market in history, with its reserve currency status and role as a hub for global innovation. It also serves as a critical safe haven during times of crisis. Our U.S. exposure is strategically diversified across key sectors. We invest in AI and data infrastructure, recognizing that the revolution is happening now, building the future. Biopharmaceuticals offer healthcare innovation, benefiting from demographic tailwinds and strong pricing power. Insurance, often overlooked, represents fortress businesses with incredibly robust balance sheets. Gold miners provide leveraged exposure to gold, coupled with significant operational upside. Additionally, low-cost ETFs offer broad S&P 500 exposure, capturing the expansive American economic growth. But here's the crucial aspect many investors often miss. When our home currency weakens, and currencies in emerging markets do tend to weaken over time, our dollar-denominated assets naturally appreciate in local terms. This isn't mere speculation. It's a built-in structural protection for our wealth. The growth engine doesn't just compound wealth. It provides essential currency diversification that fortifies everything else within our global fortress.
Welcome back to our deep dive into the global fortress strategy adapted for Shamam Enterprises. Today, we continue with Pillar 3, the opportunistic Spire, focusing on high-growth emerging markets. Every fortress has a tower, elevated, offering visibility and asymmetric advantage, but also exposed to elements. For us, that's Türkiye's Borsa of Istanbul. Let us be crystal clear. This is calculated risk with smaller allocation. Emerging markets are volatile, with currency swings and political uncertainty that can be brutal. But they can also deliver 5x, 10x returns that developed markets simply cannot match. Here's the fortress mindset. If it hits, it's a jackpot, and the entire fortress benefits. If it fails, the foundation and growth engine remain intact. This is completely different from how most people approach emerging markets. They either avoid them entirely, missing opportunities, or overallocate, risking catastrophic losses. The fortress approach allows for aggressive positioning within a defensive framework. Our key principle: take calculated risks, but never bet the fortress. Now, let's move to Pillar 4, the moat, our ultimate defensive barrier of hard assets. Every fortress needs a moat, the ultimate defensive barrier. For us, that's gold and Bitcoin. Now, some of you just tensed up at Bitcoin. Stay with us. Gold has 5,000 years of history. Central banks hold it. It works during crises, inflation, currency collapse, and chaos. When nothing else works, gold works. Bitcoin is digital gold for the modern age, decentralized, borderless, and unseizable. Yes, it's volatile. Yes, it's controversial. But it's also asymmetric protection against a changing monetary system. Together, these are insurance against currency debasement, banking system failures, and geopolitical catastrophe. They also protect against inflation spirals and market crashes. We don't hold gold and Bitcoin to get rich. We hold them so that if everything else breaks, we're still standing. The moat surrounds everything. It's the last line of defense. So why does this architecture actually work? It provides geographic diversification, ensuring no single country's crisis destroys you. It offers currency diversification, protecting against any currency collapse. There's asset class diversification, so when one struggles, others thrive. And volatility management, where the foundation provides stability and the spire provides growth. But here's the benefit nobody talks about: psychological resilience. When you know your fortress can withstand storms, you don't panic sell at bottoms or chase bubbles at tops. You sleep at night, not because you're guaranteed returns, but because you're protected against disasters. You don't need to copy our exact structure. Your fortress should reflect your knowledge and circumstances. But the principles are universal. Start with your foundation, understanding what you truly know. Add growth engines, identifying robust, liquid, and innovative markets. Size risk appropriately. High-risk positions should be smaller. Always maintain a moat. Hard assets aren't optional, they're insurance. Think in decades, because fortresses aren't built quickly. After 35 years, here's what we know. The purpose of wealth isn't consumption. It's optionality and security across time. The global fortress isn't just about our lifetime. It's about creating something resilient enough to pass on. That's what fortresses do. They outlast their builders. Build your fortress, not just stocks. Like this video if it changed how you think about investing. Subscribe for more battle-tested strategies. Comment, what's your fortress strategy? We'll see you in the next one. Stay fortified.